Hey everyone, this is Scott here again with my next live trading video. Today is Wednesday, May 18th, and in this one here, we're first going to take a look at the broader markets, and I'll be discussing my general short-term outlook on, the S&Ps and the NASDAQ. And then after that, I'll basically be reloading, so to speak, on a few new trades. I've had quite a few positions come off this past week for profits, fortunately, so I'm definitely very light right now on my overall trades. So in particular, I'll be selling some short strangles on both Roku and Coinbase to continue to take advantage of their super high implied volatility and therefore their very expensive option prices, and to also stay pretty directionally neutral on both those stocks. But as always, before we get started here, in case you are brand new to the channel, again, my name is Scott, and I just want to let you know that you can also find me on SKILLSHARE as well, where you can take my very in-depth classes on options trading or stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for SKILLSHARE using any of those links, you'll get a full 1-month free trial. All right, so first off here, let's take a look at the S&P 500 as shown with SPY. We'll go ahead and zoom in on this chart a little bit here. And so as I've been discussing in previous live trading videos, I've been waiting for a short-term bounce or basically a little bear market rally here. So for SPY, support right now is right around there at $385 per share, and overhead resistance is right around $408 per share. So actually, let me go ahead and change this line a little bit, put it right there. And there we go. So currently SPY is definitely stuck in the middle of this price range currently. Now, if this downtrend does continue to play out, then I do expect to see SPY and the broader market in general to continue to move down after being repelled off this resistance level yesterday. And hopefully we could see a continuation of that move all the way down to those lows once again at around $385 per share. And what I would definitely want to see as a bear on this market is to see a break of this price level and to make newer lows. But ultimately, because in the very short term, I was actually bullish on this market, right? Like I mentioned, I was hoping to see just a very small bounce here. That's why in the past couple of days, I've laid out quite a few short put option trades. And fortunately, with this bounce actually occurring, all of them came off for a nice profit. Right, briefly, for those of you who have been following this series quite closely, let me come back to the monitor tab and take a look at my account statement over the past 5 days. As you can see here, my Netflix as well as my Boeing short puts came off recently. And then also last Friday, I believe as well, I had a short put option on Apple, which also came off for a profit too. And then alongside those, also my Coinbase and Roku short strangles came off for profits yesterday. And these trades were almost entirely due to the fact of a huge contraction in the implied volatility across the entire market. Right, so once again, because we have been seeing a very nice rally over the past couple of days here, a lot of fear in the market has been sucked out of a lot of option prices. So therefore, if we now come over to /VX and take a look at the VIX futures contracts, again, this will show you the implied volatility for the S&P 500. And basically also it's a measurement of option prices. So again, alongside that nice little rally we've been seeing the past couple of days, we've also seen implied volatility and therefore option prices come down significantly at the same time. So ultimately for that Roku and that Coinbase strangle, right, because I sold those contracts right around this time zone when their option prices were very expensive. And then of course, when the prices collapsed, I was able to buy them back for a much cheaper price and make the difference there as a nice profit. Now today, however, we are starting to see an expansion of the implied volatility once again because, coming back to SPY one last time, we are quite clearly seeing a nice sell-off happening in the market. And the vast majority of the time when stocks sell off, you'll see implied volatility expand and therefore option prices expand once again. So point being, today would be a good opportunity, and perhaps over the next few days, if this sell-off does continue, today would be a good day to start selling options once again. And so that's why now coming back to Roku, I'm going to reload on the stock and sell a brand new strangle. So if I zoom in here on the price action chart, and as you can see, Roku, along with the broader market, has been in a very nice downtrend recently. And so far, we've seen a low of around $75 per share. So therefore, on my put strike here, as part of this strangle I'm going to sell, I'm going to pick my put strike to be at least at 75 or perhaps a bit below that point. And then for the call side here, as you can see, we've witnessed a succession of lower highs in Roku. So perhaps right now at around $100 per share, this could be the next lower high for this stock before returning down lower and making lower lows. But just to be on the safe side, I'm probably going to pick my call strike to be at least at 120 or perhaps even above that. Moreover, coming down and taking a look at the implied volatility for this stock in particular, Like I mentioned, over the past couple days, since we've seen such a nice recovery across equities, implied volatility therefore has contracted quite a bit, Roku not excluded from that. But still, that being said, the implied volatility right now at around 93% for Roku is still much, much higher than where it usually is. Right, if I zoom back out on this chart a little bit here and just taking a visual look at this implied volatility chart, as you can see quite obviously, yes indeed, the implied volatility right now is much, much higher than where it has been over the past 1 year. And that's why we're seeing an IV rank of 63%. That's pretty darn good. And also an IV percentile of 83%. Very, very good. And in case you don't know, these two metrics will show you in just one quantitative number how high or low the current value of implied volatility for Roku is based on the past 12 months. So the closer these two numbers get to 100%, the better the opportunity is for selling options. So now I'll come over to the trade tab and take a look at the option chain here for Roku. For this trade, I'm going to be in the June 17th monthly expiration cycle with 30 days left to go. And like I showed you on the charts there, for the call side of this strangle, I think I'm going to sell the 120 strike call, which has a 24 delta. And then also, I think I'll go with the 70 strike put option with only a 9 delta. So because the delta here on the put is much smaller than for the call option, that's what's going to give this strangle here an overall bearish bias to it. So now I'll right click on the call option here and go to sell and strangle. And here we go. This is the order to sell one contract of the 120 strike call alongside the 70 strike put option. Total credit is going to be 440-ish bucks. That's very nice. And of course, that's because the implied volatility for the stock is still very, very high. So to try and get filled pretty quickly here, I'll lock in a price of maybe 440. Go to confirm and send and take a look at the buying power effect here. It's only about $1,000. That's totally fine. Well under 5% of my account value here. So then we'll go to send. And no fills yet on this order, so we'll come back to the monitor tab and perhaps change my price a little bit. So there's my Roku order. And yes, indeed, as you can see, the mark price for the strangle has fallen a little bit below my limit price. So I'll right click here and go to cancel and replace. And I'll come down to maybe 435. Let's see what happens here. And there we go, just got filled and price improved to 438. Awesome. So next step, I'll come back down here and right click once again on the call option and go to buy and then strangle. So here I'm going to set up my closing order on this trade if I am indeed profitable on this position. So I'm going to buy back the exact same contracts, 120 strike call and 70 strike put right there. And as usual, I'll try and do so for half price. So half of 438 is about 219. And then we'll make it a GTC order so it's always in place. Confirm and send and send. And then lastly, for this position, the way I'm going to defend it is in my usual way, where I'm going to either buy or short shares of stock if the stock does cross either one of my strikes here. So basically, if Roku does still increase in price by quite a bit and rises above my call strike here of 120, at around that point, I'm going to purchase 100 shares of the stock. And then conversely, if Roku falls below my put strike, once again, at around that price, I'm going to instead short 100 shares of the stock to cover the contract. Now, my assumption here is that Roku will continue to fall along with the broader market. So at least initially, I'm going to create an automated short selling order to short the stock if it does fall below 70 bucks per share. So in that case, I can come up here to the current price of Roku and click on that and then go to sell. And that brings up an order down below to short sell 100 shares of the stock. And as usual, I'll have to change a few things about this order. Number one, change it from a limit order to a stop limit order. And so for the stop price here, we'll say if Roku does fall to, let's say, 69 bucks per share, $1 below my put strike, at that point, this order will become active and then try to short those shares. And for my limit price, I'll set that to perhaps 68.50. Just give myself a little bit of breathing room there. And then also change this from standard pricing to mark pricing, and that's it. Confirm and send and send. And then one last step here is if in case Roku does start to increase in price, at some point, I'm going to have to cancel that short selling order and create an automated buying order to prepare myself if Roku does cross my call strike. So therefore, I want to get notified if Roku does start to get close to my call strike. And for that, I can create a simple alert. So now once again, I'll come back up to the current price of Roku, click on that, and then go to create alert. And so as you can see for Roku stock, I want to get notified if the mark price for that stock is at or above, let's say 115 bucks per share, which is $5 below my call strike. And then at that point, I'll come back into my platform here and cancel that short selling order and create a buying order to buy the stock if it crosses above 120. So that looks good. And then we'll come down here and click create. So that was my new Roku trade. And then also, like I mentioned at the beginning of this video, I do want to also reload on my Coinbase strangle as well. So now we'll come back to the charts and we'll go to coin for Coinbase. And we'll go ahead and zoom in a bit on this chart as well. So as you can see, recently this stock has undergone a massive sell-off. It's come down from a high of well over $300 per share not too long ago, and so far down to a low of around only $40 per share. So I'm definitely glad that I've not been a long-term bull on the stock. I can only imagine what the losses would be like. And so, but for this stock though, the implied volatility is extremely high and pretty much always has been. So it is a great stock for short-term option selling. Right, as you can see down here with the implied volatility, even though it has come down quite a bit, once again, because of that little bear market rally we've seen over the past few days, the IV for Coinbase is still at around 140%, which is extremely high. And this small contraction here alone was enough to take profits on my last strangle for this stock. And I do think there is still tons of more room for the IV to contract even further. Now, in terms of the strikes I'm going to pick for the strangle, on the call side here, I think I'm going to go with around a 100 strike, pretty much right at the current level of this 20-period moving average, which definitely can act as resistance. And then for the put side, the low, like I showed you, is around $40 per share. I'll try and get as close to 40 or 45 as possible. Obviously, if I go too far away, then I won't collect hardly any credit for selling that put option. So now we'll come back to the trade tab here. And once again, still going to be in the June monthly expiration cycle for this trade. And again, for the call strike here, I'll go with the 100 strike with a 17 delta. And then for the put side here, I think I'll go with the 45 strike put option. I do want to be relatively neutral on the stock in terms of picking a direction because it is so volatile. And of course, it's tied to Bitcoin, cryptocurrency, which in itself is highly volatile. Right, so again, for this trade, I'm mostly just trying to take advantage of that super high implied volatility and wait for a contraction to hopefully occur. So once again, we'll come down here to the call and right click and go to sell and strangle. And here we go, going to sell one contract, 100 strike call, and also the 45 strike put option for a starting credit of $375, which is very nice considering this stock is only about $70 per share right now. And also keeping in mind, of course, how far away I'm selling my options. Right, Coinbase is going to have to drop by $25 just to get down to my put strike, or it has to rally by about $30 in order to get to my call strike. So in either case here, that's going to be a massive move. And I'm willing to bet that's not going to happen. So we'll lock in that price of $375, see if I can get filled there, go to confirm and send. Buying power effect is only about $700. That's great. And mostly because this stock is not very expensive. So we'll go to send. And there we go. Just got filled at exactly $375. Awesome. So next step, let me go ahead and quickly set up my automatic closing order. And here we go. I'm going to try and buy back both contracts for half price at 185, make it a GTC order, and confirm and send, And then same thing with Roku. I'm a little bit cautious on the downside here for Coinbase. That's why initially I'm going to go ahead and set up an automatic short selling order. So we'll go to sell. And here we go. This is the order. Short sell 100 shares of stock. Make it a stop limit order. And for my stop price, we'll set that to perhaps $44 per share, $1 below my put strike. And limit price, we'll make that $43.50, let's say. Then lastly, make this a mark pricing order and confirm and send, And then, of course, lastly, I need to create an alert to notify me if Coinbase does get close to my call strike here. So we'll go to create alert. Again, my call strike is at 100. So we'll say if Coinbase gets to maybe $90 per share, then let me know. So that's good. And then come down here and click create. And so there you go. Those are the two new trades I'm going to place for today. I'm going to hold off on making more trades because I do want to see how things do play out with the broader markets here over the next couple of days. And so with that being said, that's going to do it for this video. I hope you enjoyed it. And please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my SKILLSHARE courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.